America doesn't make enough for China to buy enough to really make a big difference. We're talking $400 billion of deficit between the US and China. President Trump can't force the American consumer to buy American because America doesn't make enough for other than Ford and General Motors vehicles for them to buy it. So I think this is part of a deal and a negotiation, and I think it still holds true that the initial threat was going to come live in September or October next year. So this year, just ahead of the midterms. So I still see this as much as a political game to play for the Trump base into the November midterms.
Do some of the hard and fast numbers that the Trump administration have been talking about, do they matter? Because the point I've been making this morning is that there's a real gap between what they're aiming for and what they seemingly are able to achieve. It tallies up to about $100 billion on the imbalance with China. And there's also a big gap between the aluminium and steel production they want to bring back to the States and what they're capable of doing without cutting out allies. So do those numbers matter long term, or is it really about the direction that the Trump administration is trying to achieve?
I think for President Trump, it's about the direction. It's about the message he can say, look, I'm making America great again. But it's taken 20 years for America to get this trade deficit to the level it is. It's going to take them 10 of 20 years to redress it, even if they possibly can.
Are trade deficits per se bad things? I mean, there is an understanding from the president, I think, and from others, that if you buy more than you sell, that is a bad thing. But it's a question of whether it's sustainable or not, isn't it? And is it sustainable?
Well, I think politically it's becoming less of a good thing. Because clearly, if you're buying things and you have very little else that you are manufacturing, you think about the UK versus Germany, there's a sense that Germany is strong because it makes a lot of what it makes, and there's a sense that we're weak because we don't make a lot of what we consume.
Oh, well, you're uniquely positioned to talk about Germany as well. And look, I've off-stated on this channel, I'm a great fan of the German economic model. I'm a great fan of the German savings model. So let me put that on the table. That said, when the Germans start lecturing the rest of Europe about how they should be more German and be more frugal in their spending, they don't mean it, because not everybody in the EU system can be German. You can't all be surplus nations. Someone's got to buy and someone's got to sell.
Yes.
And so I do find a degree of hypocrisy when the Germans are trying to export their model rather than actually export their goods.
And Steve, I completely agree with you. I think when you stand back and look at Germany relative to the UK, German exports are now 50% of GDP. So if you think about any country that is vulnerable to just a slowdown in the global growth, it's Germany, much more than South Korea or Japan or China. So I think they are very much requiring everyone to buy their product, and that, but by dint of fact is maybe an overexposure and frustrates Europe when Italy and Spain and France would love to see more German domestic demand through lower taxes or more government spending, and of course the Berlin government won't do so. So they're not being very teamy on the other side of it, even though they are the strongest player at the moment.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.